October 19th, would you believe it, already moving deep into the fourth quarter. Oil prices gripping on by their fingertips above $90 a barrel, having dropped below yesterday ahead of the after the it would appear the announcement by the US government that indeed they would be releasing more oil from the SPR. Let's go to Kuwait. Sarah Akbar, chairperson and CEO of OilServe Kuwait and non-executive director at Petrofac. Sarah, welcome back to the table. I'm really keen to get your views on this sort of what appears to be a growing war of words between particularly the US and Saudi Arabia on this OPEC plus cut. Let's go to Australia and Peter McGuire, CEO of XM Australia. Peter, this is a big week in your neck of the woods and perhaps the whole world on the China's Communist Party Congress. Your thoughts a few days in now with the announcements that have been made, fairly robust, muscular language from the president of China. Your general takeaways.
Well, good morning, Sean. Good morning, fellow panelists. Greetings from Sydney. Yeah, a couple of things, Sean. First off, if you look from a commercial standpoint, it's the corporate side as far as share buyback. So that's just something to put out there, and it's going to be better from a corporate standpoint. And we need to take on mindset as far as how suppressed in the last 2 years that CSI 300 has gone from 5,800 to 3,700. So it's certainly not a rosy time for equities. Just parking that. As far as the Congress, a number of key points. First point is, and it really hit us between the eyes, I think the point of view that Taiwan is there in a lot of ways for the taking. They've satisfied their appetite with Hong Kong. They've parked that one. And now the next move forward is how they're going to move forward with Taiwan. They're not going to sit on their hands by the sounds of things, Sean. I don't really want to put too many geopolitical words out there, but yes, it's a little unsettling, but that seems to be the way that China's going to move forward.
Yeah, it is. It is certainly a little unsettling, and I would have thought that I suppose, like certain elections in the West, you say, "Oh, that's part of the electioneering." I think Jamie just dropped off there. I don't know if he's still on the call. His line seemed to go down. But the question vis-a-vis, where is there an intersection point, do you think, Peter, in terms of the Chinese Congress and its politics and its economics, i.e., I think the biggest one being the sort of commitment to the zero COVID policy, that there is an intersect with the rest of the global economic performance at the moment? Or is everything completely baked in from China into the financial markets, into the oil markets?
Well, a couple of things. First off, if you're looking just on Bloomberg, just hit up, Beijing COVID cases at 4-month high as top party leaders meet. So that's troubling, considering you're moving into I've been in Beijing in November and December, and it's frightfully cold. So that's not a good sign if you've got that ratcheting up as far as 4-month highs. And it's probably not unusual considering you're entering that winter season. So that's going to be hard to manage. Secondly, you've got to understand where the yuan is, and we've gone from 6.4 against the US dollar to 7.2. So the continual weakness across that fabric as far as the currency. And the economy is languished. I mean, any market that's down so dramatically, it certainly hasn't bounced like other major markets have, like the US, for example. It's a long way from its highs, and it's going to be a tough time getting momentum moving forward from here, I'd say, Sean.
Peter, I wanted to talk to you this morning a little bit about inflation and interest rates. Get your thoughts there, because it feels like we've come out of, speaking of temporary, we lived with temporary last year, that the inflation was temporary. And then this year, we've lived mostly with the idea that inflation could be muscled, it could be wrestled down to the ground with these bionic interest rate hikes that we've seen by the Fed. But I think we've come out of that. It's like we've just come out of the cold shower of realization of, oh my goodness, these bionic interest rates are not going to take these inflation rates down. And
Absolutely.
this sort of this is kind of the new dawn in a way, that we could be with bionic rates for a while. Your thoughts of that sort of moment of realization of higher rates for longer?
Sean, I finish a shower each day, just to let you know, with a cold
Right.
shower. When I'm at the Kapinski for the OPEC meetings in December, you hit the cold shower there and it's about 2 degrees Celsius. And I tell you what, it's cold. So that's what it's like this morning. That UK market, that UK CPI just dropped 10.1%. Food prices rose 14.8% from a year ago. Producer prices 15.9% up. Raw materials rose 20%, also all above expectation. And I'm just looking through some notes Mohammed El-Arian mentioned as far as that city forecast. Are we going to see, this is for UK, are we going to see 28? Are we going to see 18% as the headline sometime in 23? So that's the point that we sit here today, Sean. Is 10 a high number for the UK if El-Arian and Citi say that 18 is the number? And God help us if 18 is achieved, because where would interest rates have to be, my dear friend?
They would have to be some, I mean, like we saw in the 1980s, which is the ultimate sort of parallel that is worth getting your head around, that in the 1980s, to get inflation down, the rates had to go above inflation, not
That's right.
sort of come up from below it and suck it down. They had to go above it and push it down, and that was quite a massive task. So if indeed the question then becomes, does the federal the Reserve of the US and the central bank governors elsewhere have the stomach, or do we all have the ability to absorb that? That is the next question, it seems, at this time. And not that we have.
You could absorb it at $30 crude, but you can't absorb it at $100 crude, Sean, because the cost to the consumer, no matter where, are too great. And that's what we're all feeling across the planet. If you ask anyone of any age, food prices, what's happening with utility bills, you've got family in the UK, the stories must be horrendous from what I'm hearing there, and we're not even in winter yet. So, you know,
Yeah.
I look forward to this show together, and I'm going to make a point of it. The 19th of December will be an interesting time to look in retrospect over that 2-month window.
The opportunity for Asian countries to absorb discounted fuel. It would appear, Peter, that the oil price cap that the G7 countries are pushing forward with is dead on arrival. Looks like it's going to have so many holes in Asia that it's Swiss cheese. There's no way to have it lock in.
Yeah, very much so, Sean. You know, it's something that everyone wants, but unfortunately, I don't think it's going to materialize. So it's a work in progress, and let's see how it is dissected, digested, and what the outcome's going to be. I just want to make reference to that point you mentioned earlier about diesel and the impact that is having. Naturally, we're at historic lows, and the supply side is going to be very, very tight for the consumer out there, with heating oils all across the US and naturally across Europe. So this is nearly, Sean, a perfect storm. And when you take on board all of these moving parts, I think it's going to be very, very dynamic, this market, over the next, get after the midterms. But from about this time next month, I think it's going to be dynamic.
Whether we'll actually see, I mean, we're starting to see in France indications of actual shortage, i.e. you go to a gas station, they say, you know, can I have a liter of X? And they say, well, sorry, we don't have X. That whether that sort of shortage does escalate into being, you know, you pick up the pump and you go to put it in your car and there's nothing in it. Whether we get to that point is I think, obviously, as you pointed out earlier, we're still only in mid-October, and supply chains do seem to be still under some duress. Let's get the survey results. We'll wrap it up there. Peter McGuire, as always, from Sydney, Australia, thank you so much. Sarah Akbar from Kuwait, and also Jamie Ingram from London. Really appreciate your insights this morning. We have Brent just holding by its fingertips at $90.19 above 90, just holding there. Will it sustain this $90 floor? We'll have to see. It does feel like the momentum is still with a downward draft. Have a great day, everybody. Thank you for your half hour.